Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments.
U.S. Market Peripheral Notes, 2026-401, Wednesday. This video presents a direct, informational narration of the source document.
Our analysis today will cover 7 sections. First, the market overview, focusing on geopolitical pricing. Second, a macro scan of strong economic data. Third, technical analysis and overbought warnings. Fourth, an energy and inflation warning. Fifth, a look at key sectors and stocks. Sixth, corporate earnings and transformation. And finally, a strategic summary in April strategy. We'll begin with Section 1, Market Overview, Pricing Logic under Geopolitical Maneuvering.
The market is currently undergoing an unusually dramatic pricing process. We're seeing both the US and Iran publicly drawing the line. At the same time, Wall Street appears to be selectively pricing in a scenario where the war ends within just a few weeks.
This table outlines the conflicting ceasefire narratives. From the U.S. perspective, the narrative is that the war is in its final stages with an expectation of a ceasefire within weeks, allowing for the normalization of shipping routes. The logic is that the U.S. has achieved its strategic objectives. From the official Iranian perspective, however, the state of the war is ongoing, with no ceasefire talks requested or underway. Their timeline expectation is a protracted conflict, with shipping lanes remaining at high risk. The logic here is that Iran will not accept a ceasefire without its core demands being met.
Now for Section 2, Macro Scan, Strong Data Offsetting Recession Concerns.
Several recent economic data points have come in strong. February retail sales saw a month-over-month increase of 0.6%, the March ADP employment report showed an addition of 62,000 jobs, and the March ISM manufacturing index registered at 52.7.
Let's look at how these numbers compare to expectations. Retail sales came in at 0.6%, while above the expected 0.3%. ADP employment was 62,000, surpassing the forecast of 45,000. Most notably, the ISM manufacturing index was 52.7, significantly higher than the expected 50.5 and marking its first expansionary reading in 17 months.
Moving to Section 3, Deep Technical Analysis, a test of the year line after a vertical surge.
The S&P 500 has completed a 300-point vertical surge. This rapid ascent occurred over just 2 trading sessions and was largely fueled by short covering. The market is now encountering significant technical pressure. It faces dual resistance from both the monthly and annual moving averages. The annual moving average, in particular, serves as a critical dividing line between bull and bear territories. Concurrently, sentiment indicators like the VIX are hovering near 20, suggesting that option premiums remain elevated due to investor caution.
And here's a key observation from the source document. The first rebound back to this area after a violent sell-off has a 90% probability of drawing an aggressive response from shorts.
Section 4, Energy and Inflation Warning, Extreme Scenarios Above $100 Oil Price.
There's a notable policy game developing around oil prices. The U.S. Treasury is reportedly treating $100 per barrel oil as a base case scenario and is not ruling out a potential spike to $200. Furthermore, there's a warning of a lagged supply shock. The supply gap is not expected to be fully felt for another 2 to 3 weeks, at which point it could trigger a significant repricing in the market.
Next is Section 5, Key Sectors and Stocks, Divergence and Opportunity under the AI Narrative.
Let's review some key corporate and sector-specific news. First, SpaceX has reportedly filed confidentially for an IPO, which is providing a lift to the entire space sector. Second, Intel has announced a $14.2 billion buyback of its Irish factory, signaling a major capital expenditure push. And third, pricing for DRAM and NAND memory chips is expected to be constructive in the second quarter, driven by strong demand from the AI sector.
Turning to Section 6, Corporate Earnings and Transformation Pain, Oracle Layoffs and Nike's Collapse.
We're seeing a divergence among legacy companies adapting to the current environment. Oracle is reportedly laying off between 20 and 30,000 employees to reallocate funds toward its AI expansion. In contrast, Nike stock experienced a 15.5% collapse. This was driven by a combination of declining sales in North America and China, as well as shrinking gross margins, leading to what is described as a long-only capitulation.
And our final section, number 7, Strategic Summary and April Trading Strategy.
The recommended strategy for April involves 3 key steps. 1. Avoid chasing the current rebound, as it is facing strong technical resistance. 2. Reduce risk exposure ahead of the upcoming long weekend, as this period is prone to profit-taking. And 3. Focus on the substance of the presidential speech. The market will be looking for concrete details of a peace plan, and their absence could lead to a repricing of war risk.
In closing, the market is likely to go through a second bottoming process during the month of April. Therefore, investors should consider using the current rebound as an opportunity to optimize their positioning rather than aggressively adding exposure.
This document is provided solely for informational and research purposes and does not constitute investment advice, financial advice, trading advice, or any recommendation, solicitation, or offer to buy or sell any security or financial instrument. The author is not acting as a registered investment advisor, broker-dealer, financial planner, or fiduciary. No advisory or client relationship is created by the publication or use of this document.
Investing and trading in financial markets involves substantial risk, including the possible loss of principal. All market views are for informational purposes and do not constitute trading instructions or guarantees of future performance. Any investment decision is undertaken solely at the reader's own discretion and risk. You are responsible for conducting your own independent research and due diligence. Past performance is not indicative of future results, and information contained herein may become outdated without notice.